Welcome, everyone, to another edition of the Tony Sirianni podcast. I am thrilled to have my friend Tash Elwyn, who is president of the Private Client Group at Raymond James. Thank you for being here, Tosh.
Thank you, Tony. I'm excited to chat with you today.
Yeah. So, well, there's always a lot to talk about, I guess, with for you and I. But I want to talk a little bit about initially sort of the state of the marketplace. I mean, there's just been a lot going on in our business. I mean, I think you can make an argument it's changed more in the last 5 years than it has in the previous 50 years. Just with everything going on, and it seems to happen so quickly too. So equity. And it used to be like, oh, tech's going to come, it'll catch up and it'll make our. Now there's some fear around tech with like AI and stuff. So there's like anxiety, and even a struggle to grow. Like you see that with a lot of advisors. They're out there or they're at firms who maybe don't have the scale to allow for growth. I mean, that's one of the things. Are our businesses growing, or
Mhm.
are we gonna die off when the greatest generation leaves us and all that kind of stuff. Just some of your thoughts generally on where it is from your seat, because I know you talk to advisors all day and you
Mhm.
see it. So
Yeah, I think there's so many different directions we can take that question, and I think probably the two most relevant directions would first be to take a step back and really look at how barbelled the industry has become during my time and your time in this profession. And by barbelled, what I mean is at one end of the barbell through consolidation and even in some cases, Tony, collapse over the years.
yeah,
You have these mega national firms that have varying degrees of capabilities, but in so many ways, these firms have either grown to such an extent or as some would argue, they've lost their way to such an extent that they scarcely resemble the cultures that so many advisors grew up with. And then at the other end of said barbell, there are startups and boutiques and regionals, and these are firms that to varying degrees have culture, but they just don't have the scale to have the
yeah,
full
yeah.
breadth and depth of what advisors need. And so it's not quite this binary, but it's almost as if in the profession today, advisors are finding themselves having to choose between capabilities or a culture.
Interesting because I also think what you're seeing on that sort of smaller end, like with the smaller advisor you're talking about, are these aggregators and aggregation, and like you're replacing sort of one bad deal for another bad deal sometimes in those situations where you're aggregating, but you have the scale, but you don't have the quality, products and services that you might have. You just somehow created scale for scale's sake. It's hard to say what the reasoning is because of course you lose culture in that trade.
That's right. And I think that speaks really then to the second trend that I would describe, which is in addition to how barbelled the industry has become, would be that there's also a proverbial fork in the road where at one turn of this fork, you have firms that certainly are led by really intelligent, sharp folks, but they're folks that look at the expense of leading their wealth management firm and they recognize that their single biggest expense in doing so is compensating advisors. And they become intent on using technology and AI and other means to standardize and commoditize the delivery of advice to such an extent that they can try to disrupt their own advisors and disrupt that cost. And you're seeing that inevitably, I think, in this aggregator space as well. We're just given the massive gap in valuations between the private and public markets and wealth management. One of the only ways they're going to be able to rationalize these premiums that have come into the market in recent years is going to again be by disrupting advisors and
Yeah.
standardizing that delivery. And then the other fork in the road, and this is certainly where Raymond James very proudly stands, is one in which we too see advisors as the most significant investment that we make at Raymond James, but do so because they are the greatest asset at Raymond James. Advisors are our clients. And so everything we do from a technology standpoint, all of the investments that we make are all aligned around intentional growth. And how do we invest in capabilities and tools and technology in a way that we can help advisors be more efficient, be even more effective in serving their clients, and as a consequence of that, generate not only better experiences and better outcomes for their clients, but also be rewarded with business growth. And that topic of growth, Tony, is something that
Yeah.
seems to be all too often left out of the conversation in the industry today, where so many firms, particularly the private equity firms, are so focused on valuation and
They
expense.
got, those guys, Tosh, I think they thought they were buying a football team, but they got a baseball team. They got a bunch of individual actors, and then if it's just money and you don't provide anything other than money, then what do you have? And those strategies, in my mind, don't work very well unless you can grow. If you can grow and you've sold a part of your business or whatever you've done, well, then okay, then you can sort of justify it. But they don't give you anything to help you grow. I mean, that's the challenge. And typically, there's a diminution in products and services sometimes with these guys because those aggregators aren't investing back in the business, right? They're just looking to get their 5 year or 7 year number out.
Well, that's exactly right. And so that's why, as we take a step back and we look at our vision at Raymond James, which is to inspire and empower the world's best financial professionals, every investment we make is designed to reaffirm the advisor as the center of the universe to the client, the
Yeah.
center of the universe to us as our client, and to really be a catalyst and a partner to those advisors for intentional growth by positioning them to be able to better leverage all the capabilities of the firm, but also, I think, really importantly, Tony, unlike so many of our competitors, continue to empower the advisor to be the ultimate arbiter of how to weave together those resources for the benefit of their clients or not, as they deliver bespoke solutions and not this assembly line of a
Yeah.
financial services factory.
Yeah. The commoditization is something that's been going on for a while, right? So, and just, there are things that have accelerated it, and today with technology, you mentioned one of those things, AI. So, just let's talk about that a little bit about what you guys are doing with AI. Where do you see it going? You know, um, my contention is it's much more threatening than robo-advisor was, which I think was a sheep in sheep's clothing, right? That was nothing. But here, there are opportunities to enhance operations, operationally, help things go along. But I worry about two things. One is a regulation. So if I'm Elizabeth Warren sitting on a court, I could say, "Hey, why do you get a commission? You ran this through AI." And I could see her saying, "Well, why do you get a commission? You didn't run it through AI to check on it." I mean, we with the regulatory environment, it's just not, there yet. And then also right now, and as far as trading and things like that, it seems to be more aspirational than what's actually available today. I mean, people are worried about something we don't quite know yet. Where are you on in this whole thing?
Yeah, so while it's oftentimes human nature that uncertainty can breed anxiety, and certainly there's a lot of uncertainty around the future of AI technology, how it will or won't transform wealth and advice, et cetera. I couldn't be more excited about how we're leveraging technology and how we're investing in AI at Raymond James to help, again, reaffirm the advisor, make them even more efficient and more empowered than they already are today to do what they uniquely do best, which is engage human to human and deepen relationships. And so we're investing in technology in very real ways to do what AI does best, which is automate processes, streamline data, and liberate not only the advisor, but also the advisor's team and also the entirety of our home office to have more capacity to engage human to human and deepen relationships. And so when we look forward 3, 5 years plus, Tony, I think we're going to really see this, particularly at Raymond James, as a tremendous catalyst for more growth and more advisor empowerment. And
Yeah.
while elsewhere in the industry, again, it may be used to commoditize what advisors do, here everything is centered on how do we reaffirm advisors, including the use of AI.
Yeah, and sometimes again back to the regulatory stuff, you might want a big firm to be there to help you and have some rules and regulations and some thought around what's going to happen with it.
Well, and I think that's why all too often we hear not only from advisors that are long tenured with Raymond James, but also advisors that are choosing to affiliate with Raymond James, that against that backdrop in the industry of mega firms and boutiques, they see us in so many ways as being the best of both worlds, where we
Yeah.
have the scale and the sophistication that we can help them meet the most complex needs of their most affluent clients. But very importantly, because arguably that's all just table stakes, we continue to deliver that in a culture where they have tremendous accessibility and responsiveness. And again, I think technology just serves to underscore all that because the more we invest in technology and automation, the higher touch we're going to be able to be and really bring to bear that power of personal between us and the advisors that we serve as our clients and
Yeah.
advisors then ultimately serving their clients.
So I had also read talking about, trying to make advisors' lives easier and also to help them, service some of these high net worth clients. You guys have an initiative around business owners that's interesting to me because, some of the best clients that you have are people who own their own businesses, and that's where liquidity events come from. And again, it brings up the issue of scale. If I'm in a really small boutique, I need to have the products and services to help this person,
Mm-hmm.
or,
So
or
there's
the M&A capabilities.
That's right, and there's really two initiatives that we're in particular focused on that speak to what you just touched on. The first being, and it's one of the many things that I'm really excited about under the leadership of Paul Shukri, who's now only the fourth CEO in the 64-year history of Raymond James. And Paul has introduced something that we call advisor time. And advisor time is a focus on across the entirety of the firm. How do we invest in technology to make it even easier than it already is today for Raymond James advisors to serve their clients and do business with Raymond James? How do we create more capacity again to be a real catalyst for their growth as they make a difference in people's lives? And then that gives us the ability to double down on some core competencies that Raymond James has long excelled at, one of which, as you just noted, is the focus we've had on business owner
Yeah.
and workplace wealth. And as our studies have shown, nearly 65% of an advisor's high net worth clients are business owners. And one thinks of the complexity around helping a client better manage and unlock the equity in these illiquid assets that through decades of blood, sweat, and tears they've built. It requires additional capabilities and competencies on the part of the advisor. And so we're doubling down on that and making investments in that space as well as more broadly workplace wealth, because it's very important that we continue to be the best catalyst and the best partner we can be to advisors.
Yeah. And along those same lines, and in my mind, it connects with AI a bit. I think AI, it gives you a consensus opinion about a lot of things. Like just this is what everybody's thinking. You talk about commoditization, it's even more commoditizing, right? But where AI can't look at private markets. So I kind of feel like that's going to drive even more alternative use, and it's just something that's happening now. Where are you guys in that mix too?
And that ties in nicely to the third strategic pillar. So, in addition to the focus on advisor time, business owner, workplace wealth, we've long been focused on, but have also in the last 3 years really enhanced our capabilities in not only private markets, but more broadly, private wealth altogether.
Yeah.
And again, that's a space that Raymond James has long excelled in supporting advisors with that focus. But as recently as 3 years ago, we launched within the firm a private wealth advisor accreditation program where advisors that already have expertise in a space are invited on an opt-in voluntary basis to participate in additional training. And the results of that programming have been nothing short of breathtaking. And by that I mean we've graduated nearly 400 advisors from that program in less than 3 years. Those advisors on average have had 4x the net new asset
Oh.
results post graduation of their peer group. That's
And
not
and
just
these are
versus.
experienced advisors already going into it.
Absolutely. These are the best of the best, our most successful practitioners, and they're enjoying 4x the net new asset results post graduation from this program. And again, it all comes back to being really intentional about
Yeah.
how you invest in capabilities and resources and support advisors, but also continue to inspire and empower them to have the autonomy that they may not enjoy elsewhere, to always be the arbiter of how to weave these together for the benefit of the client. And so this is not about cross selling, it's not about what's good for the firm. It always begins from what's best for the client and then ensuring advisors have all the tools to do that.
There's something about, just a seasoned advisor. Sometimes you get in I don't want to say it's a rut, but you're doing the same thing over. Then you could get inspired if you get education. You're like, oh yeah, I should be doing this, or just, reconcentrate your efforts a little bit on something. It's good to get a little spark every once in a while.
Absolutely. It's, as I like to say, it's a lot more fun to be part of a winning team,
Yeah.
and sharpening the proverbial saw helps it be that.
Sure it does. Hey, we kind of buried the lead here because the first thing I mentioned about firms and what's going on and creating anxiety on some levels, we've talked around it with these aggregators, is equity and equitizing books. And I know you guys have a program, we've written about it, where you guys actually work with it. Talk a little bit about that because I think that that's an important part important for advisors to see how you guys are viewing it because it's obviously something that's going on in the marketplace.
Yeah. Yeah, would love to chat about that. And obviously very core to the Raymond James culture is a belief system that to the extent anybody owns the client, it's the advisor, not the firm. And so we've long standing
That's a key. That's a key differentiator too, by the way, Tosh.
absolutely, and we refer to that as advisor choice, meaning advisors at Raymond James enjoy book ownership. With that book ownership, they have not only internal choice of all the different ways to affiliate with us, but they also have external choice because we always want advisors to put clients first, even if it means choosing a different financial institution. So, as a natural extension of advisor choice, we have long excelled at consulting with advisors on practice planning, succession, acquisition, across all of the different ways to affiliate with us. And that goes back decades. So, we've been a
Yeah.
consultant, we've been a banker, a lender in that regard, et cetera. But then more recently, as you've covered for us, we introduced practice capital solutions where, as an extension of everything I just described, we're now also leveraging the balance sheet of Raymond James in a way that we can provide growth capital to advisors that are seeking a capital infusion from someone that's sitting on the same side of the table with them, shares their values, thinks conservatively, thinks independently, doesn't need a liquidity event or a
It's
continuity
not a
fund needed.
5 year or a 7 year.
No, exactly. We obviously have a much longer time horizon than that, and that's been really well received by advisors across Raymond James, knowing that to the extent they need capital for growth, or they are seeking capital for succession, that Raymond James can be that trusted source for them.
Yeah, it's a partnership, right? So you gotta be there for your partner.
That's right.
Yeah. Well, believe it or not, we're at the 20-minute mark. If I missed something, let me know. But I did enjoy you being here, and thanks. I want to thank you for being on the show. Is there anything else you want to say that I missed out on?
I would just thank you for the opportunity to chat today. I enjoyed it. I can't believe we've already hit 20 minutes. It
I
feels like
know.
it flew by, and
Yeah, yeah.
always appreciate the conversation and the work that you all do for the industry as well.
Well, thanks, Tosh. We'll see you again. We'll talk again.
Great. Thanks, Tony.